Hey, everybody. Welcome. Glad you could join me tonight. Very happy to be able to have another chance to chat with you. You can see me right now. I am deep in the bowels of my think tank. In my think tank, everything is blue. I surround myself in blue light frequencies. The frequencies penetrate every cell of my body and they squeeze out creativity and stimulation and inspiration. And so I'm going to share a little bit of that with you here tonight. So bear with me. I'm just having a little fun with you. Life is too serious. But anyway, let's get on with it. Tonight, as I usually do, we're going to stretch the parameters of our thinking. You know, the motto of MMG Capital Trust and Management Company is that we pick up where the status quo leaves off. All right. And we're going to do just that. So tonight, we're going to deal with what you've been seeing everywhere on the internet. Buy gold, buy gold, buy gold. And you know what? It's probably a pretty good idea. Certainly beats holding fiat currency. All right. You've heard him say 100 times, well, if you don't hold it, you don't own it. Well, there's a certain amount of logic to that. Okay, there are practical applications for some alternatives there, but this is what you're hearing, right? And there's a lot of truth to it. But we're going to go beyond that tonight, and we're going to take a hard look at where the status quo leaves off and how we can pick up from that point and go beyond. Those of you who have been around and know me, you know that's what I do. So hold on. We're going to take a look at a couple interesting points here tonight. I'll keep it short and give you a different perspective to consider. So let's start here. Gold. Trade it or hold it? Okay, that's an interesting question. Have you ever thought about that before? I know that I haven't heard anybody talking about that. You know, the standard fare is buy your gold and hold it. If you don't hold it, you don't own it, right? So the status quo basically is saying hold it, all right? And if you want to bury it in your backyard or hide it in your attic as a store of value, as the dollar collapses, you know, that's a pretty good idea in that regard. But I want to give you another way to look at gold. So let's just dive right into it. Here's a chart that we can see starting on Monday, the lower left, Monday, the 15th of April. Gold was at 24.42. All right. That was 6.5 months ago. And you can see it's been up and down, a pretty steady climb. Nice rise. So if you bought gold in the beginning of the year, you've got a nice appreciation on your assets. Now, the thing to keep in mind is that this increase in price does not necessarily mean that gold has increased in value, other than as it is in relation to the collapsing US dollar. All right, so from April 15th to October 29th, which is today's date, it gained $332. Current price today is $27.74. All right, I believe that's an all-time high. So if you bought gold, you're happy about that. Nothing wrong with that at all. So what is $332 compared to the original price you bought it on April 15th of 24.42? That's 13%. So you've gained 13% in value from April 15th to October 29th. Okay, not bad at all. Sure beats, you know, a lot of things that are out there. But in 6.5 months, that's basically a 2% monthly average gain. Okay, 2% monthly. and it's going to continue. We know that. We don't know how fast. There could be a geopolitical event that causes it to skyrocket. But again, that's only relative to the US dollar. Now, think since April 15th, how has inflation affected your budget? How much is inflation going to eat away at that 13% gain? There's some products that have increased in price 5, 10, 15% since April. And so really, what is the real gain in net value? You follow my thinking here? So it looks great on paper, but what's the real effect in the real world? Bear that in mind. So far this year, we've seen a 2% average monthly gain. And let's compare that. Now, this is holding gold. If you got gold buried out in the backyard, this is the value that you're looking at, and you're doing well, okay, relatively speaking. But what if we were to trade gold? All right. Here's an overview of an account that I just started 2 weeks ago, October 11th. This is October 29th. So basically 2 weeks ago, the return is already 40%. All right. Look at the lower right, the profit factor, 2.72. That means for every dollar invested, you've earned $2.72. Okay. So how do we get that when gold has kind of been doing this? Well, you can see if you bought in April of this year, you can see from the point you bought it, it went down. Then it perked up a little bit, made another new high, not by much, but a little bit. And then it went back down again and down again, up a little, down again, back up some, poked its head up real nicely. End of July and entering August was down again. All right. So when you're holding gold, you're only gaining the net gain of increase from your point of purchase. When you're trading gold, you're making profits on all those rises, all those dips. It rises, there's a profit there. It dips, there's a profit there. You can buy long, sell short, buy long, sell short, buy long, buy long, buy long, sell short, and you're making profits all along the way, which add up to be significantly higher than the increase, the net increase in gold value itself. So let's go back here and take a look at this account. Okay, in trading, there's always ups and downs. All right, you can see the chart that the first 2 days of trading were positive. All right, took a little dip, went flat, didn't trade for a couple of days. Then it took a dip, went negative, had a little bit of a drawdown. That's trading. Those things happen, and you can expect it. That's just part of the game. All right, it isn't guaranteed profits every single day. But then you can see back to sea level, slight drawdown, back up almost immediately. And then it starts stair-stepping up and up and up and up and up. And then just the last couple of days, just been a tremendous increase. So again, a profit factor for every $1 invested, $2.72 are earned, 40% in the last 2 weeks compared to 13% in the last 6 months. And so let's dig down a little bit deeper and take a look at the underlying trades that underpin these results so you can see what goes on. And this is really exceptional. I think you're going to find it exceptionally intriguing. So let's go there. Okay, so this is the account that we're looking at. We started out as a small account, $5,000, and just as a test. and have subsequently increased the capital on that. But we're looking at closed positions, all right? And as you can see, under the symbol, XAU versus USD, that's gold. The only thing being traded here is gold versus the US dollar. Nothing else is being traded, okay? So that's first off, something to be aware of. Now we're going to look at the individual trades, okay? There's 25 trades on a page, and we're going to kind of dissect this page by page. I have 11 pages we're going to go through, and I'm going to show you each and every one of them so you can see the detail of the trades that have actually contributed to that graph that I just showed you, okay? Now on page 1, you can see the profit on the right, it's all green. Losses show up in red. Okay, so on page 1, we got no losses, 25 wins in a row. And folks, I'm a trader. I've been trading for years. And I will tell you, this is ridiculous. It's absolutely ridiculous. It is. I've never seen anyone make 25 positive trades in a row. So, all right, so let's go to the next page. We're on page 2. Green, green, green. You can see, the profits aren't great, $5, $7, 10, 25. All right. So, they're not big, but they do add up. All right. So on page 2, again, we have 0 losses, another 25 wins. So that's 50 trades in a row with no losses. Unbelievable. This is unheard of. All right, we're on page 3. All right, another 25. Page 3. I'm making notes as we go along here, okay? That's 0 losses out of 75 trades. Are you with me? Do you understand how rare this is? So, okay, look, finally, there were some losses here. 10 losses in a row. Boy, that's a bad streak. That is a bad streak. $1.35, $1.20. Here's a big one for $7. They're all in the $1 and $2 range, except for that $7 loss. Okay. So for 10 losses in a row, compared to the wins that you see on this page, $13, $15, $12, $12, $9, $12. Okay. I think we can handle that. But all right. So we got 10 losses out of those 25, and each of those losses is minimal, which says what? Risk management here is exceptional. Exceptional. Let's go to page 5. All right, here's another hot streak. 0 losses on page 5. Page 6. 0 losses. I mean, I've seen this before, and I'll tell you what, I'm just beside myself looking at this. This is unheard of. Let's go to page 7. All profits. Page 7, 0 profits. So we're 1, 2, 3, 4, 5, 6, 7 times 25 with only 10 losses. So we're 175 wins, 10 losses. Let's go to page 8. Oops. Dang it. There's a loss for $5. Screwed up our streak. All right, there's 1, there's 2. Another loss for $9.50. So on page 8, we got 2 losses out of 25. We're going to 9. We're almost there, almost finished. But I want to see these totals. Okay, so there's 1, 2, 3, 4, 5, 6. 6 losses out of 25. On page 9. Oh, there's a big one, $48. That's a big one. but the others are $5. Here's 52-cent loss, 27. Okay. So yeah, there are losses. There are losses. 6 on that page. We'll go to page 10. Looks like we got 1, 2, 3, 4, 5. 5 out of 25 on that page were losses, 20 winners. And then on page 11, we only had 8 trades, so 2 out of 4 were losses. All right, so what are we looking at? We got 1, 2, 3, 4, 5, 6. We got 10 pages of 25. That's 250 plus 8. So 258 trades and 25 losses out of 258 trades. That's a ratio I can live with. I don't know about you, but I can certainly live with that. And as we've seen, most of the losses were minimal. So that's what we're looking at here in our copy trading program. And I just can't tell you how excited I am to see this. If you've seen, I've talked about this particular trader in the video that I posted on the escape page, mmgcapital.biz/escape, on the results report on top of the page. All right, and there you will see that since inception 2 months ago, he's up 180%. And the account that was started after he started was up in 2 months, 81%, 2 months. And so we can see from what's going on here in this actual live account, this is a live account, it's not a demo, that we can see how that's happening. So if this is something you can see yourself being a part of, you need to join the MMG Capital PMA, Private Member Association. You can find out how to do that and review all of our previous 10 or 11 sessions now that we've done on how to escape the economic reset. mmgcapital.biz/escape, and you'll find out how to join the PMA there. There's more than trading in the PMA, much more than trading, a lot of resources you can find out. Just go and explore, and hopefully this has given you a different perspective on what you might be able to do with gold. All right, just a couple of comments on that. The account that this trading is done from, copy trading, is totally hands-free. You fund your account, the account is connected with the master trader. He does all the trades, and the results reflect on your account in proportion to the equity that your account has to the master account. Okay? And all the other clients of the copy trading. All right, so you might be 2% of the overall equity in your account or some portion. All right, it's totally hands-free. You don't have to do anything. You just fund your account, connect it, and check in to see the results every so often. Totally hands-free, passive cash flow. And that's what we're after in these times. You know, and the times that we're in are going to be very eventful if they're not already. All right, and if you're sitting comfy and cozy in status quo land, thinking that everything is going to be just fine from here on out, I think you're in for a rude awakening. I have been emphasizing for years how people need to create an independent source of cash flow so that no matter what happens to their other sources of income, employment or business or whatever, we've seen from recent unnatural disasters how you could wake up one morning and go to work and your place of work is no longer there. That's happening with increasing frequency. So I don't need to tell you what's going on in the world. You already know about that. I'm just emphasizing that independence on finances, economics, cash flow is critically important so that no matter where you go, where you have to move to, where you have to bug out to, you still have a source of cash flow to support you. And this is the ultimate PT concept. Perpetual traveler, previous taxpayer, permanent tourists, all right, travel around the world, your cash flow is still coming in. Now, as it relates to gold, this is a way to profit from the dips and rises in the marketplace, where it's going to dip and rise and dip and rise and dip and rise, and 6 months later, you're at the same point you were 6 months before. So those that are holding gold haven't gained anything in that example. Whereas trading the dips and the rises, you could end up in the very same place you were 6 months before, but you have made a ton of profit along the way. Not to mention the fact that the account that you have is fully liquid. You can access your funds whenever you like, make withdrawals. The account is fully liquid, and that's key because cash is king these days. You never know when you're going to need access to your cash. It's not tied up. You haven't given it over to someone else to manage for you. It's in your account. You control and you manage while someone else is making the profits for you. Okay? So those are the facts. You make up your mind what you want to do, but this should at least give you something else to consider above and beyond just buying gold and hold it. I hope that's helpful. Take care. God bless. And hopefully we'll see you on the next video. Bye for now.